Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Brynick, and I'm joined by Ben Rains with the two top stock picks to start 2024. What have we chosen out of the Zacks #1 ranked strong buys? Well, there are two interesting choices to start this year. They're kind of blasts from the past, is what I would say. And I'm going to start with my pick, which is Zoom Video, ticker ZM. Remember them? They were a big winner during the start of the pandemic when we were all working from home, had to use the Zoom Video to either work or talk to our friends and family. And then it kind of died out as a thing, right? But Zoom Video as a business did not die out. It's still humming along, and businesses are still using it, but the stock has really sold off. So this makes for an interesting combination now. Dare I say it, Zoom Video may be a value stock here. But let's take a look and see why it's got the Zacks #1 ranked strong buy ranking right now, because this is also a big part of the story. So let's take a look at those earnings estimates, because that's where we get the #1 rank, is changes in the earnings estimates. And I'm on the detailed estimates page on Zacks.com for Zoom Video. And you can see, if you scroll down, you get this agreement estimate revision section. And right here is where you're getting the Zacks #1 rank. So for the current year, which is a fiscal year, fiscal 2024, 11 estimates are up in the last 60 days for this year and 10 for next year. So that's a real consensus that something better is going on. They're underestimating what's happening with earnings on this company, and all the analysts mostly have had to raise for this year and next year. And if you look up here to the section right above it, just the earnings estimates section, you can see earnings expected to be up 13% here this fiscal year, but a decline of 6% for next year. But I'm not that concerned about next fiscal year. It's still a couple of quarters away, and the estimates are being revised higher already for next year. So it could just be that the analysts are a little bit conservative, and they will be course correcting that as we go along this calendar year. But we'll see. But this is what's interesting to me. Last year, they made $437, expected to make $494 this year. So I'm liking that a lot. On the actual sales growth, you're only getting 2.6% here, and expected to be about the same for next fiscal year. So it's not a huge grower anymore. Most of the customers are the customers here. So it's going to be a matter of, can they keep costs down? Can they be efficient with the business? But can they find some more extra new growth somewhere? And meanwhile, the shares are cheap. Let's look at what the price and consensus chart actually looks like. That's my favorite chart amongst the Zacks charts. So you can see it's been a wild ride if you own these shares in 2020. If you dove in and expected to kind of hang on and never dove out, you can see the results here with the shares down dramatically. But over 2023, they really didn't do anything. Shares were actually up, but only about 3% last year. So they're just kind of holding in this lower area. Over the last 2 years, they're down 62%. So they seemingly have bottomed, but unclear. But what I like about this stock is that look at where the earnings estimates are, and they are on the rise a bit here. So they did peak, pulled back a little bit, but on the rise again. And now with the shares selling off the way they have, it's trading only at 14.5 times forward earnings. So that's under 15 times for a stock that was very expensive back here in 2020, but now is basically transformed into much more of a value play, especially with that sales growth that's a lot lower. This does have a value component to it now. Can the shares go cheaper here? That's possible on a bigger market sell-off. It has had a little bit of a boost in the last couple of weeks of 2023. on this little mini rally, but nothing super dramatic as you can see from this chart. But if it got even cheaper, if I could get it around 10 times, I might be more interested as a value investor here, just simply because it does have a little bit lower growth portfolio now. And so I'm not willing to pay more for these shares, certainly not over the 15 times, but it's at 14 and a half here. So Zoom Video, one to watch here in 2024 as it seemingly, has a business, is making money, and could be a interesting value stock here to start the year as a strong buy stock. Now I'm going to turn it over to Ben because he also has a stock that boomed during the pandemic, and that's also an interesting play. So I'm turning it over now so you can see what his stock is for 2024.
Thanks, Tracy. Hello, everybody. This is Ben Rains here with my top stock pick of the week. And today I'm looking at Shopify, which trades in the ticker SHOP. So Shop. Shopify was one of those former COVID high flyers that got crushed by higher rates and slowing top line growth. But things are turning around for the e-commerce firm, and it looks worth a look to start 2024, with it still trading over 50% below its highs, even as a lot of these big tech names are trading at new highs. So Shopify provides what it has dubbed the essential internet infrastructure for commerce. The firm helps companies with everything from site design and sales to marketing, payments, shipping, and more. The company then makes revenue from recurring subscription fees and then various add-on costs. The company grew its revenue by an average of 65% between FY17 and 2021, as companies, small businesses, entrepreneurs, and really everybody else clamored to catch up to the new age of retail. The company even posted stronger growth before that, but its days of 60% growth pretty much over at this point. And that makes sense, as those figures were pretty unsustainable as your yearly revenue climbs up closer to $10 billion a year, and its customer acquisitions slow in a more saturated market. So Shopify has made up for that slowing expansion by raising its prices in 2023 for the first time in over a decade. And on top of that, Shopify is really committed to boosting its bottom line, as is the case with Amazon and really all of those forward growth at all costs tech names. So now we're going to go over and take a look at some of Shopify's estimates and some other fundamentals to see why it might be worth a look to start the new year. So we can see here that Shopify is a Zacks ranked #1 strong buy stock. That internet services business that it's a part of is in the top 17% of over 250 Zacks industries at the moment. So that's a solid sign. Excuse me. We're going to go over here now to our detailed estimates page. We can take a look. So we're calling for about 25% revenue growth this year, from about 5.6 billion all the way up to nearly 7 billion, and then another 19% next year to get up to about 8.3. So though those days of 60% growth are gone, still posting 25 and 20% revenue growth is really impressive, especially as you get up to these really high figures. And then on the bottom line is where the company is really focused on. So we're going from 4 cents per share last year all the way up to 70 cents per share. And then another nearly 50% growth next year is projected to get all the way up to $1.04 per share. And then we can see this really big positive bottom line revisions, up from 53 cents per share before its last report, up to that 70 mark. And then just as strong over here for 2024, up from 75 cents per share up to $1.04. And then we can see its most recent, so those most accurate estimates for 2024 are coming even higher than that. So that's a great sign. And this is part of a longer term overall positive revisions trend on the bottom line for Shopify. As we go over to this page right here, if it's going to load for me, as we try to just show you these longer dated earnings revisions trends. And if it doesn't want to load, we'll go over here real fast and take a look at its price movement. So as I mentioned, kind of at the top, it's trading over 50% below its highs at the moment from the fall, so November of 2021, when the NASDAQ last peaked. So Shopify is down about 54%, even though it's been on a nice strong run over the last year, and especially actually off those October 2022 lows. So the stock's up about 120% over the last year. And then if we look over the last decade, we can it didn't start trading until 2015, but we can still see it's been on a massive run. And it's now kind of trading at levels it was not that long ago, but just down well below those highs. So if we look here, we'll go to just display some data. We're trading at about levels it was in the early part of the summer/late spring of 2020. So after that initial COVID boom, as I said, still trading 50% below its highs. And then on the technical front, we'll go here and take a look because it's sitting at a potentially attractive technical entry point at the moment. As this data, loads for me again this morning, taking a little bit of time to get here. So we can see Shopify is back above its 200-day and 50-day moving averages, and it's below those overbought RSI levels more recently. And then if we go longer term, far backdated, we can see that it did meet some resistance at its 200 week moving average. So that could be a key level to try to, if you see the stock move above this level, maybe it's time to get back in. But we can see it did find buyers at that 50-week moving average, which is a great sign. And it's coming down from near overbought levels. So the market's clearly going to take some selling to start the new year after that long run. But it certainly looks that Shopify is worth considering. Obviously, its valuation levels are still pretty sky high. It's not even really worth showing those. Sky high compared to the broader tech sector, lower than it used to be, but its balance sheet is really stellar. It's got about $5 billion in cash and equivalents, about $10.5 billion in total assets versus just $850 million in current liabilities and about $2.2 billion in total liabilities. So great balance sheet. You could make moves, some strategic acquisitions maybe down the line. And its outlook is really impressive still in an essential area of the economy. So Shopify is certainly worth looking at the moment, still trading about 50% below its highs, and maybe wait for it to cool down at the early part of the new year. So that does it for me in this episode of Top Stock Picks. Make sure to check out our Zacks.com/promo page for a look at some services, portfolios, and more.